Oops. All right, guys, good afternoon. Welcome aboard to the Aftermarket Recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thanks so much for taking the time out of your day to join me today and every afternoon at 5 p.m. Eastern Standard Time here on the G.A.R Capital YouTube channel. Bottom right-hand corner of your screen, click on that white logo, turn on notifications, subscribe to our channel. Really do appreciate it as always. Let's get to it. The Dow fell 809 points today. Nasdaq sank nearly 4% on the composite. S&P down 2.81%. 41.75. Futures are down a little further after hours with Microsoft and Google reporting. We'll get to that in a second. Equal weight S&P down 2.39%, kind of the same as the Dow index in a sense. Small caps down 3.15%. Dollar index starting to test nearly 2020 highs. 102.34 up 0.58%. 10-year yields actually fell 54 basis points, 2.72. TLT did bounce today. I actually bought some TLT today for the portfolio, for my portfolio. GLD up 0.15%. I expect yields to come down a little bit now. TLT is way oversold on pretty much every single time frame imaginable that you could see. So definitely trying to see if I can get some value there with that TLT buy. High yield credit fell as well. That kind of moves with the Nasdaq and growth stocks usually. Investment grade bonds pretty much flat on the day. Looking at crude oil today, up 3.22%. 101.71. Remember, all the commodities got hit yesterday. It's almost a daily market out there. You're just getting used to like just coming back and forth, up and down. Remember yesterday we were down earlier on S&P. We rose into the close, and then we dumped overnight. We were fine. 3 a.m. comes London Open. They dumped it, and that's pretty much what we got today. It's like a daily thing, back and forth. And watch tomorrow be green. That's just the way it's been going now. Gold futures up 0.55%, 1906 an ounce. Silver futures were red today, down 0.51%. Bitcoin took a hit, down 5.32%, 38,000. Ethereum at 28.26 today. So let's go ahead and go over the earnings right here. We're getting some headlines here from Microsoft as that they are on the conference call. I have the stock here in the bottom right-hand corner of my screen. Robinhood cuts 9% of full-time workforce. That was reported today. Q3 on Microsoft, I actually was reading the numbers, was actually very strong. Beat top and bottom, revenue growth 18%. Pretty much beat on all metrics. Cloud is still strong. This price action here, maybe investors are looking for something in regards to a buyback, maybe an increase in dividends, but a pretty solid quarter from a solid company. It is tied very close to the S&P since it's weighted so heavily. So of course, it is down a little further away as the Nasdaq has underperformed the S&P. I believe it's down about 17% year to date, versus the S&P down about 11. So again, it's about 600 basis points behind the actual performance of the actual stock. That includes dividends, of course. So Microsoft, again, I still love the company. When I'm looking to buy here, let's take a look here. The issue with buying here is the fact that it is so tied to the S&P, since it's such a big part of it. So again, you can get some news on a Microsoft or something like that where the stock actually goes down. Again, that makes a lot of sense if the stock goes down based on bad earnings beat, a bad earnings miss, maybe an analyst downgrade. But for most part, it's just moving with the S&P and closely with the Nasdaq Q since they are so heavily weighted on the company. But again, the numbers are very strong for this kind of company to grow double digits like that. And again, it's still a very, very crowded market, which is cloud. Again, I just read an actual headline here that the CEO was talking about, the CFO was talking about Xbox is gaining market share in consoles. So that's something to see there as well. So again, I still like Microsoft. I do have an alert at 260. I will be a buyer there. That's your 100-day moving average on the weekly chart. So again, I'm looking to add some more shares of Microsoft. Again, it's a company that I love long term. They're one of the dividend payers for decades now. Again, can't really say anything safe, but it's pretty much as bulletproof as it gets, in my opinion. Let's take a look here at Google. Reported their numbers: 24.62 EPS, missing expectations of 26.11, 68 billion, missing expectations of 68.04 billion. But they did announce a 70 billion buyback program for Google. So that's something to see. Really, the headline that came out of that number that stood out to me, guys, was really YouTube. YouTube's monetizing or revenue was below expectations, so the stock is getting hit right now. 22.30 right now. That would break the 100-day moving average. So again, I'll probably look to go get some Google tomorrow, if anything. Let's see what I can get, what I can pull out there. There's no real gaps to fill, excuse me, on the weekly chart. But I think Google is such a strong company. They do have a great balance sheet. They did not meet expectations. YouTube is slowing, I guess. Again, a lot of that streaming stuff. Again, I'm pretty sure they have that. That's accounting YouTube TV, which is actually a really strong service based from reviews that I've read for streaming service. I just got into Sling. I still have football TV, which is my main one, but they don't have TNT. But Sling is actually not too expensive either, and they have the NBA games on that. So that's what I've been using, but I haven't cut the cord on anything in terms of streaming. I mean, I use it pretty much all, me and the wife. So maybe that YouTube number is kind of telling us a little bit in terms of what could be more pain for Disney, a Roku, a football TV. As you see, if you're a shareholder of any of those, like I am, you've definitely seen some pain coming your way. The stock is down about a little over $1, a little less than $1 after market, and Disney's starting to get close to critical support. You know, I can see it getting down to $100 a share. $100 a share, I would love to add some more. Again, I like Disney. I've always liked Disney. I mean, I gave a share to my stepson of Disney, and he's red. Poor kid. It's terrible. He can't win, I guess, huh? So that's really the two main earnings results that came out. In terms of what I've done today, I did have QQ calls. What I was expecting today from the market was a gap up this morning. I was expecting a continuation at least to 330, 331, and then what I was going to do, personally, was sell those calls and start getting into puts thinking that we were going to retest. Well, we didn't get the gap up, we started falling. So I started saying, okay, well, we do have some earning catalysts coming. Let's see if Google and Microsoft, what they do. And again, we just basically got pretty much the Friday liquidation continuing. So where does this move Nasdaq from here? If we go to the weekly chart, we really did break really big support. Again, what we got now is breaking down below the Russian invasion lows, and we're below the 100-day on the actual weekly. So there could be some more pain on Qs. What was the big catalyst this week on Qs, or today? If we go ahead and take a look here, take a look at the heat map here on the S&P, and you can see Tesla, which is a mega cap stock, guys, worth hundreds of billions of dollars, moving 12% in one day is absolutely bonkers for that kind of name. Keep in mind that Tesla is up there with like an Amazon and a Google in terms of market share and market cap. That's hundreds of billions of dollars wiped out in market cap. You know, it really, well, I don't know about 100 billions, but tens of billions of dollars in market cap wiped out. And that's a big part of the QQQ, of ARKK, and a lot of these tech funds. So Tesla taking a hit post that Twitter acquisition by Elon. Remember that he had to put his stock up for collateral. If those shares break down a certain level, he has to sell shares. So again, if you're a Tesla shareholder, you're kind of wondering here, okay, you know, the Elon thing, you know, it works. Obviously, he is a celeb in his own way, whether you love him or hate him. And the company's done great based on their earnings. Non-GAAP, I know that gets me a little nervous. But for the most part, you're looking at this and you're saying, okay, this is the Twitter thing. Is it a distraction? And again, do you want your CEO running 3 companies or even 4 companies? It's something that you need to ask yourself as a shareholder of Tesla. I'm not saying I would sell it tomorrow, but again, any kind of bounce, maybe you have some profit taking, maybe you've been holding it since COVID of last year, maybe you've been holding it around the 200s, 300 levels. I mean, I don't think it's a bad time to ring the register on Tesla, to be honest. Maybe if you can get above 1,000 again, that wouldn't be terrible. If you're a long-term shareholder of Tesla and you're the type of person where, you know, you own a Tesla car, you own the panels, and you're all about EVs, yeah, I think Tesla's still the best name in EVs. But again, if this is a time you want to take some profits, I completely get it, because you may see some more volatility in this name. It's just going to happen. You know, we look at the charts. I mean, the charts, that the name alone has absolutely been on fire. You know, you're talking about near the hundreds back during COVID, pre-split. And then it's just been an absolute tear. So you've been holding since 2020. You're still doing great. Nothing wrong with ringing the register if you wanted to on Tesla. I personally am not. Okay, let's go ahead and answer some questions. Terry asked about Boeing puts. Let's go and take a look here. Yeah, Boeing is breaking down. And looking at it here, if we kind of go and stick kind of a trend line here, looks like 160 is next on the weekly chart. If we bring up the daily, again, pretty ugly. So again, the weekly would probably give us a little more room to see. I would say 160 puts wouldn't be bad. There is a gap to fill right at 158. So 160 kind of gives you that nice little spot there. They do report tomorrow. So let's see what Boeing does in terms of price action. Apple testing the 50 DMA in the weekly. Respect that since COVID lows. Good time for a bounce soon. For Apple, again, they do report on Thursday. So let's see, in terms of their hardware sales, I'm expecting their revenue in terms of services to keep increasing. Apple has done well, but again, the hardware services, are people cutting back on buying stuff in comparison to the year before? I wouldn't be surprised if Apple doesn't have the greatest of quarters, maybe tests 150, possibly 140. Not out of the realm of reality, but we've been kind of stuck in here in a range here in the weekly. And again, like you stated, the 50-day being respected so far. So again, I wouldn't be surprised if it did break down, at least initial reaction. Maybe Apple does say something regarding buybacks or so. That could be possible. I don't know if Tim Cook wants to buy back shares at these levels. It's not exactly that it's cheap either. You're paying for the safety of Apple and that balance sheet. That's where you're paying that multiple, basically. And that's my largest position. I do love Apple. So regardless if it breaks 150 or not, I still love the name. I still want to own it. Excuse me. So any idea how realistic we can go? It seems more and more rate hikes incoming, downside incoming. Well, the issue is, the Fed is talking a lot about 50 base rate hikes, but we haven't got that yet. We got the 25 last month. Granted, we didn't have in March, we didn't have a rate hike or rate cut or even a rate decision in April. So they were closed in a sense. There's no meeting. So basically what May is doing is just doing another 25 for April and another 25 for May. So that's not really moving the needle. We have to see exactly how CPI is going to react. We'll get that in May. Obviously, we're getting started with earnings season. We're getting to the meat of the Nasdaq, or the meat of the mega caps, with Apple reporting, Amazon, Google, and of course, Microsoft. So again, do we have lower to go? Absolutely. I mean, looking at it here, I'm not one to look at gamma levels. Gamma levels are a kind of a bunch part of where a lot of contracts are expiring. Usually, I'm assuming it's probably right around 4,000. 4,000 seems to be that magnet. And it looks like being where we are at 4140. 4101 breaks, looks like a guarantee, or not a guarantee, but pretty much a certainty that 4,000 is going to go ahead and be broken, if not just tested. And if we actually go based on just fibs here, top to bottom, what we got from the peak and below, and the peak being in January, 3664, which is not terrible. Guy Adami on CNBC said something interesting. He said a 4,000 SPX would put us at a 17 price to earnings. That's actually not bad in terms of a price to earnings multiple on an average. Remember how high we were? We're at a point where we were at 31, 32. At some points, those prices are just too expensive to pay for those multiples or pay for those earnings. You're going to start chasing yields if you're a fund manager. So again, it really depends on the perspective if you're looking at it. If you're saying the markets are bad right now, yeah, it looks like you're going to get lower prices. Isn't that kind of what the Fed wanted anyways, lower asset prices? So I don't expect the Fed to really go too much out there in terms of being comforting to any of the bulls of being kind of a soft landing. I think 50 basis points is pretty much the watermark we're going to be going for a while. So again, now what you're fighting here is how fast can the market digest this hawkish Fed versus how fast can we see a normalization in terms of inflation at the cost of some growth. We need growth to kind of come down. This is where we are in terms of this is what you're getting. Again, you're getting a reaction from wanting inflation to cool down. You're going to get lower asset prices. The question is, the secret sauce is, how much do asset prices have to go down for inflation to normalize or to cool? Again, even if we see slower inflation, that's actually a good sign. But again, I don't think we're going to get to a level of negative inflation anytime soon. We need something, a catalyst, a terrible catalyst to happen, like a war or something. But again, slowing inflation is better than just stagnant inflation. So again, what we're seeing here is kind of that balance. What level does the S&P say, hey, this is fair value. Hey, this is not expensive anymore. When you go to a car dealer and you have a budget in mind, but you see the car of your dreams and it's just a little more money, are you willing to pay that extra cent or extra dollar just to get exactly what you want in a car, or are you going to stick to your budget? That's kind of where we are. So my kind of analysis based on that, hearing that, and again, I kind of cross-checked it, 17 PE or forward multiple price to earnings on 4,000 S&P seems to be fair value. I think the market's going to price it there. So I do believe 4101 will probably be coming, if not tomorrow, Wednesday. Don't be surprised we get to 4,000 S&P maybe by the end of the week. So again, 4101 is a big support level. That is the Russian invasion lows. We are only 39 points away. We have to see what happens overnight. Obviously, Microsoft and Google are not helping the cause currently. Actually, we're getting a little bit of a bounce, so we'll see. What's the reason for the sell-off? Right now, it's pretty much just technical. A lot of it is just liquidity. Again, getting liquidity out of the market. You're seeing a lot of volume spikes, kind of a little bit of sell-off. Again, you're trying to figure out what is expensive in this market. Again, we're getting some earnings. Microsoft was positive. Google was not that great. Again, are buyers going to want to pay for Google at their current forward multiple, especially when dollars are being constrained? When rates are going up, your dollar is going to be a little more precious, not as easily accessible, aka liquidity. So now you have to be extremely careful on where are you putting your capital to work. Now, there is no alternative. It doesn't really apply here because now you have this implied scarcity of money as rates increase. You're removing the actual monetary flow, or in a sense, the money supply. So again, that's going to create kind of a sense of fund managers kind of looking for those sectors. Again, I'm not saying that Nasdaq is not a great sector or tech is not great. Tech has given us the bulk of our returns for the past 10 to 20 years in the stock market. Again, it's going to eventually cool down. That's normal. It doesn't mean that semiconductors are going to go away. It doesn't mean that social media is going to go away. It doesn't mean that streaming is going to go away. It just means that the value at that current time in 2022, April 26, again, traders are not looking to buy your stock, whether you're a Roku shareholder or a Google shareholder, at the price you paid for. Does that mean that it's absolutely worth zero? No. It just means at this current moment, it's not as valued as high as before. If anyone had owned a home during 2008, again, the home didn't dynamically change. Really what changed is that your neighbor sold an equivalent home at a cheaper price, which lowered the value of your home. If you paid your mortgage on time and you didn't have any issues or adjustable rate mortgages, you were still caught in that hit of the lowering values of the homes. Maybe your neighbors went bankrupt. They had to short sell the house. That still affects your home value, even though you didn't do anything wrong. Whether you didn't pay your mortgage on time, whether you didn't do renovations or what have you. If you're a Microsoft shareholder today, did you do anything different 6 months ago or a year ago when holding Microsoft? No, it's just the price of the value went down. And that's it. And right now it's a very measured technical levels that we've been seeing on a daily basis. For example, with VIX. I even tweeted that today that we were breaking the highs, and we did. Now again, now I have a little bit of some knowledge here. Okay, we got some Microsoft, which is a strong company, Google being a strong company, they reported their earnings. VIX right now is starting to get to a level, getting pretty close to a topping level around 37.70 on the daily. Now could that break and get us to 40? I talked to Investment Club about that. Again, I'm still kind of waiting for that panic, that level where everything kind of hits the fan. I think 4,000 is the spot that we get there. I think 17 times multiple seems to be a little more of a easier pill to swallow for fund managers, in my personal opinion. No, I don't think Google will fall like Netflix. No. Google has a better balance sheet than Netflix. And Netflix only has really one business. Google has multiple businesses. So they can stay afloat if streaming goes down because they have YouTube, obviously. But Netflix, if they lose subscribers, well, it went from one thing, free cash flow. They don't have free cash flow. Subscribers don't matter. They still have subscriber growth. But their free cash flow actually went up, but their subscriber went down. So it seems that, it seems like the media, not even the media, just traders are just kind of pointing at that name since it was such a high flyer in 2020 as a way to kind of revert it to the mean. And that's kind of what we're getting here, kind of a unwinding in a very crowded market of tech. If you're a long-term investor, 5 to 10 years on these names, if you've owned them 10 years ago, you're not really thinking about closing anything. And if you're owning them now, again, unless you need the money, you're really not doing anything yet. Am I deploying capital? I did buy some TLT today, but other than that, SPY-G kind of remains the same. Even crypto, I still buy every week, but I haven't fundamentally changed not much. I haven't got crazy and started buying everything across the board, not yet, no. Let's say here, Nasdaq in a bear market. Yeah, it should be. I haven't looked exactly at the number, so I believe right around 6, I'll know exactly where we close at. Looks pretty close. Let's see, Carlos says, looks bad. What fundamentally do we have ahead that can give us some form of bounce? Really, the only thing that's, again, like I spoke about, that's kind of going to give you an edge is if you can time it right, which is very difficult, is you're going to see if inflation, when does inflation tip over? When do we hit peak inflation? If we're looking at the bond market, it's starting to give us a little bit of a hint that we're getting there. Why do I say that? Let me see here. What was it? TNX. That's what I was looking for, TNX. You can see that rates have rolled over slightly. Don't get too excited. But we broke out on yields and we actually came back down slightly. Again, 3% was my level that I was looking at, kind of a capitulation level. Again, the bond market being so volatile as it is now, guys, TLT, TNX measuring yields, TLT measuring bond value. Again, guys, you're not supposed to have 50 basis point moves in the bond market or 100 basis point moves. That's not normal. So again, the market really, if you look at a bond VIX, the bond volatility VIX, it's absolutely bananas. Granted, equities are crazy, and we know how crypto can be, but bonds don't usually move like that. Hell, stocks are not supposed to use like that. I think things kind of changed, like 6 years ago when stocks were moving, three digits daily on Dow. That wasn't very usual. I guess obviously we have more players into the market, more traders, so again, you're gonna get more stock swings, obviously. But in terms of looking at the inflation side versus the when are the stocks fairly priced? When is a price of the market is going to see, okay, inflation adjusted, this is fine to buy. We're not there yet. I believe it's 4,000. I think 4,000 is the level that I want to look at in terms of definitely start doing some serious buying. On example of Microsoft, who has shown you great numbers. Google, sure. I mean, not the best, obviously. They had a great quarter last quarter. They are buying back stock. That doesn't sound from a company that's preparing for any kind of slowdown in their business. So that is a vote of confidence. That is always nice. End of year S&P prediction change has not changed one bit. No. As you can see, volatility can work for you and against you. So again, big drops, big pops, but at the end of the day, we still got months to go. So let's see what happens. AMD 85, can it get any lower? Yeah, they do have earnings coming up. So I'd rather wait, see for the guidance, see what Lisa Su has to say before I want to make any moves on it. Really, the lows that we got to, if we go by just the most recent lows of 2021 in May, was right at 72. The stock was trading at 164 at its peak. So that's a lot on the tech unwinding of positions. So timing is the most difficult part, absolutely. So all you can do really here is just wait and see approach, do the homework that you're looking at in terms of the stocks that you want to buy or stocks you want to watch, and just kind of look for a fair price for you. And again, you don't have to run out and do something every day and click the button. You don't have to. A lot of it is trading is waiting at the end of the day, kind of seeing where things go from there. So let's see what happens tomorrow. Tomorrow we do have some more earnings, so I'll catch you guys then. I didn't do the morning note. I went out and sent out the Reuters report instead. But again, Twitter will always be there for you guys. G.A.R Capital on Twitter. Make sure to follow us there. Have a great rest of your day. Tough game for Real Madrid. Only 1 goal differential. Let's see what happens on Saturday. They should clinch the La Liga, and then let's see what happens in Madrid when they play the second leg against City. Have a great one, guys. It was a great game. Catch the highlights on YouTube. It was really good. Cheers.